In this video, we're gonna go over one of the most important frameworks and mindsets to have that really allowed me to get over my fear of trading and take more risk in the market. And that is by trading like it's backtesting. Now, this sounds very simple because, of course, we're gonna go over backtesting first and then apply the same things on live markets. But really think about it, because in backtesting, we perform better since there is no emotions, right? And so if we want to replicate the same results we do in backtesting to the live markets, then we must do the same thing. And it sounds super obvious, like you guys are like, whoa, no shit, like crazy, doing the same things and expecting the same outcomes, right? But the truth of the matter is that we don't do the same thing and expect the same results. And that makes no sense because our emotions get on the line, right? So there's no emotions in backtesting because it's fake money, because it's demo, not demo, but you get what I'm saying. And then on live markets, it's real money, there's stuff on the line. And our emotions make us perform worse than in backtesting. So it sounds simple, but once we come to the live markets, we do different stuff. We don't trade like we do in backtesting. And you must be true to yourself because you don't. Because otherwise, like for me, for example, I would be doing 15% consistently every single month, which I don't, right? I still manage to be profitable, but not super profitable like I am in backtesting. And that's because emotions get online and I don't perform as well as I would do in backtesting. Also, because there's trades we can miss due to just like not be on the charts 24/7 like we are in backtesting, not being on charts 24/7, but you're seeing every single 1 minute candle play out, of course. And so once you're seeing an opportunity, you gotta ask yourself, would I take this in backtesting? If the answer is yes, then you must execute. There's no ifs and buts, you already know. You gotta be mechanical and you gotta execute if the answer is yes. There's no maybes. Because in backtesting, you just take stuff. Whether it's safe or risky, you take it regardless. Because on backtesting, the setup may be risky, but you would be comfortable taking them. And by result, you're profitable. Because the reality is, most of the times, those profitable trades come through and help you make those profitable results. The thing is, in backtesting, you might be more at ease because for one, there's no emotions, and for two, because there's no emotions, you perform better and you have larger capital, you have larger profits. So because you have larger profits to your back, you're saying, oh, I've gathered so much profits, like, what is a little trade? What is a little risky trade? I might as well just take it. Because if it is a loss, that's okay because I got plenty of profits that I've already done in a session. So you're more at ease, right? You're more at ease and you're more not exactly independent on a moment-to-moment basis because, again, you're putting those large profits that you already made on the side to make you better at ease in the markets. But in a sense, you are. Because you're comfortable with the loss, but you're also not forcing any setup because you can just click some buttons and immediately go towards another setup, go towards another day. So you don't have to have the discipline and the patience to just wait for another day to play out. Like in the real world, you must have to wait real hours, real days in order to get a setup. In backtesting, it just clicks of a button and you can get to the another day, right? So you are executing on an unknown moment, but you are at ease because it's fake money and you're performing so well that you have profits on the side. But on backtesting, on live markets, like we've already seen on the previous video on the fear, your emotion, your decisiveness towards the trades may change depending on how the previous trades went, right? And it shouldn't. Your decision making should be independent of the previous results. Whether you've been on a losing streak or a winning streak, right? Your decision will be completely different. Maybe not your decision if you're already mastering your emotions, but your psychology for sure. If you're already taking 3 losses in a row, it comes to the 4th trade, you're kind of hesitating. You don't want to really put it on if it seems a little bit risky. But if you're on a winning streak, well, if you let your ego get the best of you, you might as well just execute it because you don't care. You feel on top of the world and you just execute. All right? But we got to remember to go on by the now and now moment. Okay? Thinking about the probabilities. Being optimistic if you are a fearful trader. And trade like you would in backtesting. It sounds really simple. But I'm telling you, there's magic with it. Because if we really think about it, then we're not trading like we would in backtesting. Because I know for sure for me in the past, I would do amazing performances on backtesting, but the live markets would not reflect that. Because I wasn't trading like I would in backtesting. Because I was afraid of taking these risky positions that I wasn't on backtesting. And you got to be aware of that and ask yourself, would I take this in backtesting? Okay? So you must have a mechanical approach rather than a discretionary one. Now, using the discretion in the markets is once you already have gathered enough experience and you can kind of tell where the market is going, and if everything looks good on paper, but you can just tell for some reason that this might not play out. By the look of the candles, or some fundamental, or the high time frame bias, the trade might smell bad, quote unquote. But realistically, if you're at the start of your journey, and even now I do this most of the times, it's by having a mechanical approach. I don't want you to try and guess whether this opportunity, because it is an opportunity, it's a valid opportunity for you to take, is going to be a winner or a loser. I want you to take it regardless. If all the checklist is ticked off, if the trade looks good on paper, meaning we've had the liquidity sweep, we've had the smart money trap, right? We are in London close, and the bias of London and New York are all the opposite to each other, right? All those things. If the trade looks good, but then the entry doesn't look that good, or today is not that good, or the time is even if you feel like it's going to be a loser, you must take it. You are obligated to take it, right? It's like the casino. They don't decide whether they're going to play the next event or not just because they don't feel like it. They must play in all events to have that same edge being reflected on reality. They cannot just decide whether to play or not play the next game. They must play all the games, regardless if they're going to lose, because at the end of the day, they are profitable. Same case for we. I know we want the next trade to be a winner, but we don't know what's going to happen realistically. We don't know whether the next trade will be a winner or a loser. So trying to predict it by these little things such as the entry not looking good, not looking that great, you'd actually be surprised by how many times we take these risky trades and they end up being winners. Okay, I've had that plenty of times. And it feels good because, again, your emotions and reality. You're coming to the trade already of course, most traders won't do this because we're coming to the markets and we're only looking to position the trade if we believe it's going to be a winner. But reality is, not every single trade is a winner, right? And it's hard to put on the trade knowing it's going to be a loser, right? Knowing. So, our expectations are set to being a loser. But if then reality rewards us with a winner, then it's amazing, right? And truth of the matter, again, we don't know. We're just going off statistics, probabilities, right? There's a percentage we win, there's a percentage we lose. We've done all the things on paper. So you must execute, guys. Must execute. Okay? And this framework also goes for doing the trade. I'm not just telling you to think like you would in backtesting when it comes to the decision making of putting or not putting on a trade. Because if you're about to do something you wouldn't in backtesting, then you must stop yourself. And this is by, I made a mistake here, but it's by closing positions too early, moving stocks to break even too early, trailing the stop loss. This because you're having fear and you've never seen profits, right? Never, I'm exaggerating a little bit, but you rarely see profits. So for the first time, well, not the first time, I'm exaggerating, but you know what I mean. Because you rarely see profits. So now that you're seeing some profits, now that the market is finally rewarding you, you're getting that fear. Okay, it might get to my stop loss, right? The greedy traders are taking their stop loss out because they want the market to come back. Or even us. When we're in drawdown, we're looking forward for the market to go back to profit. But we're in a drawdown, when we are in profit, we're expecting the market to reverse back to our entry and to our stop loss. Which, yeah, it's the complete opposite of what's happening, and it's our emotions and anxiety taking over. So you must do the contrary of these examples, because we're not doing these in backtesting. If we're not doing these in backtesting, then you must not do them in live. All right? Because then we're doing different stuff and expecting the same results. How can you expect to be profitable on live markets if you're doing different stuff than you would on backtesting? It makes no sense, but again, it's what we tend to do because our emotions are in the line. But now you would say, oh, just by doing this small little thing, but still executing the strategy to the side, it's like a small fraction of a change, right? But no, it's completely different, especially when it comes to your stop loss management, your take profit management. You're going for different targets. You're getting different results, completely different results. I've shown you in a backtesting, not backtesting module, but on the backtesting data video where we gather data at the first chapter on the technicals, where we try to see whether I'm best with no stop loss management, take 3R, take 50% at 3R and 50% at 5R, or take full profit at 5R. And you can see completely different results. Maybe all profitable, but completely different results. Some ended up the backtest session at 3R profits, some ended at 9, 12. You know, that's completely different results. And just by changing one small thing. And trading, if you change one small thing, it might drastically change your results. Whether for the good or the bad. So ask yourself, would I do this in backtesting once it comes to taking the trade and once it comes to doing something during the trade? Because you know, we take the trade and there's only 3 results. There's either stop loss, break even, or take profit. There's no in between. So there's no trailing the stop loss here, or you know, we only trail the stop loss once to break even, once we're already floating more than 1 hour and we have broken some structure. If we're just floating 0.5 but the trade looks risky, I don't really like the reaction of the candle that's going against me, I'm putting myself break even early. No. Or I'm putting my stop loss to minus 0.5. You don't see me do that. Very rarely, okay, on very rare occasions, right? It depends on the scenario. But on backtesting, you don't see me do that, right? And on backtesting, you wouldn't do that because you don't care. There's no emotions, right? I'm about to lose this trade on backtesting. I don't care. Skip through the candles, boom, 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 boom. Get to the next day, get to the next trade, boom, winner, okay, profit results. That's how you must be in reality. So if you don't do it on backtesting, you don't do it in live. As simple as that. Easier said than done. I understand. But think about it, guys. This is a very important, crucial, super simple, but effective framework to have. I'm telling you, this is what caused my breakthrough. Would I do this in backtesting? Continue to ask yourself that. Because in backtesting, I'm sure you're a monster, brother. I'm sure you're a monster. So you must do the same exact things you would have done in backtesting. And so we gotta transfer the energies. Right? You guys remember when I said energy cannot be created or destroyed, it can only be transferred. So we gotta transfer that fear, that large energy that sits on fear of trading, to the desire of becoming profitable. Because I feel this on the markets as well. Like I said, the energy is not destroyed. The energy still remains there. There's still maybe a small little bit of fear, right? There's different levels to it. I might not be having fear, or it's not fear, but like, you know, of putting on a trade on an account. Back then it used to be putting on one account, but right now that I've scaled so much, it might be fear of putting on 4 or 5 accounts, because that's a lot of risk. But the thing is, the plan, it tells me to do so, right? Because I don't have 5 accounts, I have 10, 12, you know, so I'm allowed to do that. But there's still a little bit of it's not fear. I don't want to sound like a pussy, but you know, it's that risk. So it still exists a little bit, but on different levels, of course. But I transfer the energies. There's way more energy that's positive on the side of desiring to become profitable, desiring to apply the plan in order to become profitable, rather than having that fear. Because back then I used to have more fear, more negative energy sitting on the fear of trading. And because of that, because of the dog and the boy story, if you remember, I wouldn't execute on the trade. Because the negative energy was larger than the positive one. So that would negate the action. And I'll just sit out of the trade, right? But if your desire of becoming a profitable trader is bigger than that, if you start to be mechanical and taking the trade regardless of how it looks, then you become profitable. And your identity is one of a profitable trader. Since the start of this mentorship, I'm telling y'all to think like you're already a profitable trader, because you are. And you especially joined this mentorship, so you already are a profitable trader. It's just a matter of you finishing in the mentorship. Without a doubt. And you already took the action to join us, so you will, and you already are profitable in the matter. So, because your identity is one of a profitable trader, your behavior will act accordingly. Because there's 4 layers to identity, and I'm going to go over more of this on the extras and the shadow work, identity shifting, because this is really important. But I'm not going to go too in depth in here, but it's going to help you, because there's 4 layers to identity in identity shifting. It's identity, it's your thoughts, your emotions, and then actions. Actions is the least of all, is the bottom of all, because all comes from identity. So your identity is the one of being a profitable trader. So your actions, your thoughts, your emotions will act accordingly. So your actions will match that. So if your actions match the one of a profitable trader, you're not going to do stupid stuff. You're not going to be having fear of trading. You are going to take risks. You're not going to be greedy. You're not going to do stupid shit, because you're thinking, I'm a profitable trader. So if you really think deep inside that you're already a profitable trader, you're not going to disrespect that, because you're going to catch yourself doing the opposite, right? You're not going to call yourself an hypocrite by thinking yourself to be something and doing the complete opposite, right? If you say everyone that smokes is gay, I don't know, I'm just throwing an example there, and then you're smoking, right? You're not gonna be smoking really, right? If you say that kind of stuff, you're not gonna be doing the thing you're insulting. So if you're thinking you're a profitable trader, your actions will move accordingly, and if your actions move accordingly, and you're manifesting that in your mind, reality will have no option but to catch up and but to reward you. And so you'll end up being a profitable trader, and think like you would in backtesting. Remember that, guys, please. and I'll see you on the next modules. Peace, boys.